Good morning, everyone. Welcome to Admiral Markets. My name is Chris. Thanks for joining this webinar. We're going to take a look at the Forex markets together and see what the euro dollar, pound dollar are doing in just a second. As you know, though, this webinar is intended for a global audience and may not be suitable for everyone. Please take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out more information about whether it is suitable, conditions, and other details. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please therefore seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. And you also are aware of the risk involved when trading. All right. As you know, this webinar is hosted or is presented to you by Admiral Markets. Admiral Markets has an interesting Supreme Edition for MetaTrader 4. If you don't know what it is, take a look at the website, admiralmarkets.com, and right on the homepage, you'll find out a button here that says Find Out More. Click on that, and you will get more info about the 56 features that are added to the trading potential through MetaTrader 4. So that's a very useful tool. Take a look and see how that could be used in your advantage. All right, today we're going to take a look at fibs, Fibonacci, and waves. They go very well hand in hand because basically fibs are very useful when there is a trend, momentum, and that happens in impulsive waves like wave 1, like a wave 3, like wave 5, and an A, B, and an A and a C. Fibs are not so useful when the market is in a wave 2 or wave 4 or a WXY perhaps, no, even more so actually. And then you have to be more cautious, right? Because when price is in a wave 4 and you start to fib on both sides, but price is just going sideways, that could lead to a lot of trouble. A wave 2, could still be okay as long as you put the fib on wave 1 and perhaps on the wave A of 2, right? So depends also on the subwaves within the bigger waves, but you have to be cautious when price is correcting. So basically, as long as price is in the trend or momentum, it's good to use fibs, and we can identify whether price is in momentum or trending using waves. So that's why they go so well hand in hand. The waves explain where the fibs should go at their very best. And as long as we understand what are good swings, based on the basis of waves, we should have decent fibs as well. That's why they're just very useful together. All right? So we'll take a look at some real life examples. First of all, let's take a look at the calendar. So let's take a look at the calendar. We have Chinese PMI. Let's see, that came in about the same. Aussie interest rate, 2%. We have a euro interest rate on Thursday. We have big dollar news on Wednesday and Friday. We got ADP and NFP. Those are going to be big because, of course, every single US data point is going to be interesting. And it's going to be carefully and closely watched and monitored by the market because they're trying to pick up any clue whether an interest rate hike will arrive this month, which doesn't seem that likely. About 35%, I think, believe it still will happen this month. So down from 50 not so long ago. So, but in any case, every moment where we can measure a certain data point on the US is going to be closely monitored just to see if that is likely or not. Today, we don't have any big dollar news, I think. Let me check. Oh, we do PMI, but anyhow, ADP is tomorrow. GDP on the CAD today, unemployment rate on Euro, Germany, those are big things too. All right. Let's take a look at the euro dollar. So euro dollar made a big crash 4 days in a row, and yesterday finally got a bounce. Took a bit of time. As you can see, sometimes we need clear divergence on the lower time frames before we get a bounce. And ultimately the bounce happened at which fib? Well, if we put the fib on this swing high, at least it's 78.6 fib. Perhaps if we use the entire upside, it would be a 61.8. Both fibs could be used, actually, depending on how you see this upside. I mean, technically speaking, we could even use this bottom here. All of it leads to either 61.8 or 78.6 fib, and was a bouncing spot indeed. Now, we never know which fib will be a bouncing spot. We do have, rough ideas and improvements what we can use. For instance, wave 2s are typically deep, wave 4s are typically shallow. This still, all in all, is a corrective environment, despite the upside that we had. If you look at the choppiness that we've had so far, it's just a corrective zone. So a deeper 61.8 and 78.6 is not that strange from that point of view. And price is bouncing. Now, will we break this top and head to the target? That's something I have some doubts about at this moment. I think it's just a bouncing spot. For the moment, if I look at the weekly candle, then what I see here is a pretty nice hit at the 38.2 fib. So from that point of view, I think that we could retrace last week's candle. We can basically pull back and retest maybe the high or not even reach there. And I think that should be a resistance spot. So from my point of view, I do see upside potential today, or actually I saw it already yesterday, to be precise. But I see continuation today. But as soon as it gets, I would put a fib on that weekly candle, like this. And as soon as it gets to the 50, the 61.8, the 78.6 fib, the 61.8 is at 115, the 78.6 fib is at 116. I think those could be heavy resistance zones for more downside. So yeah, I was bullish here despite the downside because I saw a bounce potential. As I said in the video recap yesterday too, by the way, for those that watched that, it's on Admiral Markets website. You just have to go to analytics, go to wave analysis, and you'll see the video every Monday. And I see upside to these fibs basically. These I think are important resistance levels because of that big weekly candle, just a big bearish weekly candle. And that's not something that the market necessarily will erase. It could, but it will have to do that with a lot of struggle, I think, in my opinion, or the chance is high that will be difficult this week. And of course, ADP and NFP could really do anything with the price because these are big news events and there will be a lot of volatility during those hours, and it, of course, can accelerate to both sides more than we expect. But just based on technicals, just based on the candle, it was a very bearish candle with a big wick on top, with the close near the low. So from that point of view, I wouldn't be surprised if this is just a tough candle to break to the upside. And therefore, in general, those resistance levels should be, provide a decent bearish bounce to the downside. All right. Now, if it does break below this bottom, below last week's low, got some space to the target here, and then to this target, and then the second target is equal to this support level, right? 108, of course, still important level. So monthly candle also finished, by the way, because of the fact that, of course, August finished just yesterday, and now it's the 1st of September. So we're looking at a bullish monthly candle, but one that has a big wick. And yeah, this month is going to be very interesting. If it ends up bullish, I am back to neutral in the long term. I've been bearish on the euro dollar ever since basically beginning 2014 in the long term perspective. If this month is not bearish, then I think we'll see probably some correction or consolidation for the next half a year, and I think then we could maybe see euro dollar downtrend continuation at the beginning of next year. So this month is important. If this month is a bearish candle, then I'm curious then I expect a break of the bottom in October. And if it doesn't break in October, again, I'm neutral. So it's a pretty interesting point. Now, why am I saying this? It all has to do with time factor. So that's the main reason. I talked about it a lot, so won't explain it. If you don't know what it is, if you're here by any chance the first time, just write me an email and I'll send you email to the following email address, Chris_Sforsek@hotmail.com. I'll write it in the chat and I'll send you some video links about that. All right. So the time factor here, the reason for that. So it's going to be very exciting and interesting September, perhaps October. Will we get the downtrend continuation, or will we get some consolidation for the next 6 months and maybe the break in begin next year? This is the email. If you're watching the recording by any chance, there it is. Now, why? Let's see here. Let's put back this fib. All right. You can see that if price doesn't continue with the downtrend, price could actually just keep correcting within this zone between 108 and 117, maybe reach out to the 50 fib. I don't expect to break above the 50 fib, or I think the downtrend could be in trouble as well, because 50 fib would typically be the last point for wave 4. And this is the wave 4, according to what I have. 1, 2, 3, wave 4, and this downside should be wave 5, right? So when does wave 5 start? That's all what I'm talking about. Has wave 4 ended now at this 38.2 fib, where I have the red circle? That's the 38.2 fib. Or will price still range between the 38.2 fib and the 108, between these blue lines basically, for the next 6 months? Or could it even reach out to the 50 at the very max? So if it breaks below 108 this month or next month, and then breaks below 104.50, the bottom, then we are probably in that wave 5, and we should see, continuation to parity, perhaps even below parity. If it doesn't happen, then this month or next month, then perhaps first quarter next year, as maybe then the interest rate in the US gets increased. Just thinking about what kind of catalyst could send the euro dollar down. The euro dollar, of course, a lot of that had to do with euro weakness, eurozone, quantitative easing, dollar quantitative easing stopping, or not expanding at least, and the potential for interest rate hike. So the next catalyst could be the real interest rate hike, right? And will that happen in September or beginning of next year? Probably beginning of next year. So slowly but surely, I'm expecting to be neutral, but this month will be the confirmation. All right. Now, of course, the fact that price was going to go back to the 38.2 fib was something that was discussed already in previous Fibonacci and wave webinars. And price, we were saying that if it doesn't break 108, it could use the 108 for a bounce, and it did. Bounced off 108 all the way to that target at 38.2 fib. Took long, but recently actually accelerated pretty fast in this upside as it went from 108 to 117 and reached the main target of the wave 4. So that that analysis has proven itself right, and now it's basically downtrend continuation, or are we going to consolidate? That's something that September will have to prove. So from that point of view, I'm not 100% sure whether we're going to get the downtrend. If we do, price is going to have to break 108. In the meantime, for a more short-term perspective, I'm expecting, as I said, up and then a resistance spot for down again. So if I zoom into lower time frames, for me, the breakout spot was right here yesterday. And as I said, I'm interested in trading it in the video from here or upon the break, perhaps somewhere in here. So let's take a look at that last potential. Anyone who took the bounce there around 112 is up about 80 pips at the moment. All right, so let's take a look. Is there a potential for more upside at this moment? Let me take a look at a blank chart at this moment. All right. One of the things why expecting the upside was just a clear double divergence, or no, single divergence between these bottoms here, and we are getting the retracement. Let's take a look where the moving averages are. Okay, you can see that on the 4-hour chart, we bounced off the long-term moving average, just like here, and the fibs as well, now facing the short-term moving average. We're kind of squeezed in between the long-term and short-term because we went from the short, we retraced all the way to the long, and now we're bouncing off the long and facing again the short right here. On the hourly chart, we're facing the long-term moving average. Okay, so let's go back to the blank one. And let me put a fib on this very first upside here. And you can see that yesterday's retracement went to a 78.6 fib. And we just reached the minus 272 target. So from that point of view, I probably would rather wait for a bit of a pullback still. It can accelerate to the minus 618, but that's only about 40 pips remaining. And the risk really is a lot more because the previous bottom is about 80 pips away. So that does not seem interesting to me. Let's see. Looking for a zone where price could retrace back to and bounce. As I said, I'm not looking for personally a trade right here. It's still this upside is expected, but because the 4-hour chart, well, actually, we did break above the 4-hour resistance right here. Okay, so that changes a bit. Still, I think a pullback is better probably. It's a pity we didn't have the webinar yesterday because we would have been in a better bouncing spot here. But at the moment, I think price has gone not very far, but just far enough for me to say it's not really an interesting entry right here. Let's see, if I put the fib on this swing high, swing low, probably the 50 fib at 112.50, for instance, could be a bit more interesting. Stop loss would have to be at least below this bottom. Now let me take a look what the target could be. We put a fib on this downside, which is the same as basically putting a fib on the weekly candle. You know, the 50, as I said, the 61.8 are the main, 70.6 fib are the main targets. So if I would aim for the 61.8 at 115, it would be about 250 pips potential there. That's quite a lot. I mean, maybe even too much to aim for today. Today, maybe 114 could be a bit better, or even 113.50, which is still 100 pips, and the 38.2 fib. And that could be the very first resistance. Don't forget that even though price could eventually get to this fib, it might do so in various ups and downs. Like for instance, it might go down here, right? Test those fibs, bounce, move up to the 38.2 fib, hit that resistance, move down again, find support, move up to the 50, maybe get some kind of flag, and then move up to the 61.8, which ultimately maybe could be a bigger bouncing spot. And you can see something like that. This is, of course, typical for the market. So when trying to cut, a piece of price action that seems interesting, then it's good to realize what length you want to stay in that trade too. Because if I'm aiming for the 61.8, that trade might take long. If I'm aiming for the 38.2, I might get less R2R, reward to risk, but I'm going to be out of that trade perhaps today, maybe tomorrow, and not at the end of the week. And especially, of course, at the end of the week, got a lot of news events. So it might be better to have a more modest take profit in mind. And we're also at the 23.6 fib, by the way, so this could be a resistance spot, and therefore would like to see a pullback. And I think that there's a decent chance we could see buyers step in again to push it higher to the next fib. 23.6 fib is a very shallow fib, and is not often used for, in this case, especially in this case, I think as a continuation, because the market is pretty choppy, so typically it goes to higher fibs. It's not impossible, nothing is in the Forex market, but I don't think the chance is very high. Ultimately, of course, if it does break below 111.75 here, and then below 111.50, well, those are the validation levels for any upside, and it could be again a breakout and continuation to the downside. That could happen too, and those levels, support levels, are important for that. Those levels would, indicate to me that this bullish retracement isn't going as deep as I'm expecting now. So those levels are important. And if it doesn't break 111.75, then 112, 112.50 could be bouncing spots for up to the next fib, 38.2 fib at 113.70. And if price then keeps that momentum to the upside, it can go higher. We got the oscillator. We had a decent downside, but not as big as the upside. And the oscillator bars are green. 3 of them already at minimum, even more. We broke the high, so we are having higher highs and higher lows at the moment. Plus, we did have momentum here. So I think enough confidence, enough factors that a dip should find buyers for one more rally up to that 38.2 fib. If not, as I said, even higher until we get probably a turning spot. And yeah, then we might see that resistance kick in, price could fall. And let's talk about the euro dollar again at that point, because there are too many ifs. We're looking too far into the future, I think, at that point. But if it does start to fall fast, could indicate that where we could continue quickly to the downside. Yeah, I think that I agree with Nennet, because it's a huge weekly bearish candle. Actually, I was telling Nennet too last week, we have to keep an eye on that weekly candle last week, because if it closes anything like it does what it did, it's a very bearish signal, right? But we have to also keep in mind that we're looking at multiple time frames. So just because there's a weekly candle that's bearish doesn't mean that it will right away move down. So what is a turning spot? Any of these fibs, in theory. The only thing I'm saying is that basically I expect a higher fib to have a bit more importance than the 23.6. But it's certainly not impossible. Ultimately, I don't expect this wick high to get broken. Any other questions by any chance on this, on my view on the euro dollar? Maybe you have a question on it, perhaps, or you want to add something that I missed, perhaps, or maybe you want to look at the euro dollar with a different tool. Just let me know. So any bounce here is certainly at this moment a reversal within a reversal in a way. But as the market always likes to retrace, right? As it moved up here, it retraced, and this downside will probably also get retraced before doing this, or at least there's a decent chance. But if it doesn't, then not just a very last confirmation, I don't want to repeat myself, but then if it breaks this trend line, obviously this is a great trend line, bounce off that trend line. That was one of the reasons why I thought this was a bouncing spot as well. Not only the fibs, but this trend line. It's a beauty of a trend line. we got a bounce. So if it breaks to that trend line, well, obviously, then this correction, wherever it stops, is over. It's finished. We're going for a breakout to the downside, down to 110, down to 108 after that. So this trend line is very important. Alrighty. Now, if you're interested in wave analysis or wave webinars, I actually had a two-part series on beginning of August. So let me write that. You can find those webinars. In the meantime, let me go to the pound dollar, take a look at that. Let me write that down quickly here. Here's part two. And that part two had really a lot of practical tips about using tools and stuff like that. So if you're interested in Wave, that would be a really good one. If you want to know a bit more of the basics, then I'm going to share part one with you here. There we go. That's part one. All right, so take a look at that. If you're interested in more waves, of course, you can also find waves. That's the two-part wave series webinar. And if you want to keep track about the current wave, you can do that. As I already said, just go to analytics, hit wave analysis, and see the most current one, which is today, the 1st of September, euro dollar rebounds and breaks resistance for ABC rally. So basically, that's what I'm talking about, the fact that we can get an ABC for wave Y of Y, right here. You can see that completing an ABC for Y of Y. Question is, how far can we go? And perhaps completing that wave 4. Time will tell if that happens this month. So let's take a look at the pound dollar. We had a 5-wave down, and therefore I was saying that there's a chance, because there's divergence between these bottoms, that we can get an ABC. So let's take a look if that's happening. Can we see indeed the correction of the 5-wave down and see some 3-wave upside? And yeah, basically double bottom instead on the pound dollar. Pound dollar, retraced a bit deeper. Now, obviously, the same story is happening here too. When we look at the candle, the weekly candle, we can clearly see a very strong bearish candle and a strong engulfing bearish weekly candle. So from that point of view, when price does get higher and retests this fib, if I put the fib on the weekly candle, I'm still expecting resistance, just because of this weekly candle, to be honest, and this candlestick pattern. Ultimately, if it breaks through this bottom, obviously we get a breakout down to the next support. We're breaking out below 153.25. See a breakout to the next bottom. And then if we break that bottom, we can see continuations to these targets and ultimately even retest the entire bottom. So those are what I call zones to the downside, really, right? And sometimes those zones indeed get bigger as we get further away from current price. So from that point of view, sometimes this looks like a snowman because the gaps get bigger. But anyhow, so that's the breakout to the downside. I don't expect this high to get broken. If it does, well, that throws out all of the bearishness for the moment. And if it does retrace higher, which I would still expect, just like the euro dollar, then we'll probably run into resistance and we could expect to bounce to the downside. And then we'll have to see how far it goes. Same story, really, just a bit of a different setting. And the difference here setting is, let me get rid of these text Okay, last chance if you want to take a look at the chat, or if you're looking at the recording, just pause it. It's a bit different with the pound because it did retrace deeper. It retraced to the 50 fib, and I was still thinking that there's a chance it could go to the 61.8. That does not seem likely after last week's candle. Let's take a look at the monthly candle. Yeah, you see the monthly candle was pretty bearish as well. A very bearish close, in fact. So, yeah, retracement. Retracement here, and then downside seems the most likely when looking at the candlesticks and the fibs, even the fibs and the waves, because this was still a strong move down. There's a chance that this is a retracement, and once we break through the support, then we get a breakout and follow through. And so that seems still the most likely scenario at this point. And now we can move down to the 1 hour chart. So is this the start? Well, we have a very bearish wave down. And we kind of like a double bottom here off of that 153.25. So for the moment, I would say that this trend line needs to get broken at least because we're still in a downtrend, therefore very risky. But if it does break, there could be that retracement potential. And we could perhaps see this kind of a correction move up to the 38.2 fib. Trend line break here is important. Otherwise, it's still, from a pattern point of view, we got a flat bottom and a downside line like this could be a descending wedge too. Just because we made double bottom here, a small one, doesn't mean the price has to rally very far. It could just make a pause. This could turn out to be a pause within the downside, and once it breaks through this bottom, it can continue. So important levels, this support, this resistance. Whichever breaks, in my opinion, leads to a high probability of a breakout to the upside, or a decent probability for a break to the upside, and a better chance to the downside, I think. And the reason why the one is a bit better because the upside is still correction. Downside is actually breaking with the momentum. So, one of the reasons why an upside here is not that unlikely, I mean, it's a decent chance as well, it's just because that this downside has completed 5 waves. It also is at a strong support level. It also has an AO that has turned around already. There is divergence between these bottoms on the lower time frame. Also, there's no real sustainable trend at the moment. This is just one fall. If the pound dollar really wants to set a sustainable trend, it's going to need an angle, something like this. So from that point of view, price has to make this lower low here, lower high, excuse me, to give it kind of an angle so that we can have a channel, right? Typically strong trends, travel at a sustainable angle of about, 30 degrees, 40 degrees. And this is, I don't know, this is, as you can see, very sharp, 75 degrees. It cannot fall like this forever. It would just eventually be exhausted. It could for a while, but it's not something, it's a pure momentum. For a trend, we need a corrective wave here. And then once we start moving down again, we have a trend in play. At the moment, it's not a trend, it's just a momentum. We need a correction after the momentum to really get that angle of a trend. That is, in a way, supporting the fact that there could be that correction to the upside. It doesn't have to be. That's why I will keep an eye on the bottom as well, because we can see a lot of bearish price action signals on the weekly and monthly. So it's possible that we just break last month's low, break last week's low, and go. So both trend lines are important. Let's take a look at the euro dollar again, and let me put on the Camarilla. I got a question here from Pierre Luigi. Great, good to hear that, Pierre. Let's see. Now EU has retraced some 30 pips and could reach level H4. Could that be a good spot? Let's take a look. Yeah, I was looking for a deeper one. It could be okay. H5 is 40 pips. Stop loss. I don't know where I would put the stop loss. Maybe this fractal, but the fractal is sailing above the moving averages, and any fractal that is in an uptrend that is above the moving averages, I don't consider really a level that it's possible, but it's not my favorite. I like fractals that are in uptrends here below the moving averages. It's like this one. So yeah, it's not impossible. It's already actually moved away from that level. It could still hook back, maybe to 112.70. Another option could be any stop loss below the H3. On this 50-minute chart, if we put a fib on this swing high, swing low, we see price stopped at the 23.6 fib, head up to the minus 272 target, and I see some confluence between the H3 and the 50 and the 61.8. I would like this zone personally for a bounce. Ultimately, the stop loss could go below here indeed, instead of maybe using this bottom. It's just that, well, the news, there's just a bit more risk, obviously, that price kind of spikes, goes a bit further than the fib, tags the stop loss, then goes up into the direction, to the upside. Those kind of risky things always tend to happen if you put the stop loss a bit closer. Or it can always happen, but in general speaking, that has been more risk than the lower one. So yeah, from my point of view, but yeah, I could be fully wrong in this, and I might miss the trade. But I like the dip. I might be wrong, and that I'm willing to live with that. I mean, if I look at the moving averages here, it's just not an appealing buying spot, even the H4, because the moving averages here are just intertwined. They're getting the crossover. And when you get a crossover like that, and the 1 hour we're at the long-term moving average, the 4 hour we're at the 21 short-term moving average, then it's just a spot of, I'd say, not very clear if we can get the follow through to the upside or the retracement. Then in those cases, not a good R2R, 50-50, and then there's not enough equity, I think, in the long term. Ah, cool. Yeah, I can see why you did it. And I don't want to spoil your trade. Maybe it goes your way. All right, you have to realize that too, of course, as you do probably. But yeah, our job, right, is to find the best spots with the best, sweetest R2Rs and good chances, right? And this one just doesn't meet that kind of that formula from that point of view. So Pierre is joining me in my ambition for a dip. Let's see. All right. Hopefully we'll get it. Otherwise, tough luck. You know, sometimes we just miss trades. Nothing wrong with that. Maybe there's something else. Let's take a look at the dollar yen. That too is kind of moving away from finally breaking through this 4 hour trend line, breaking through the 4 hour fractal, breaking through 4 hour support levels, getting that downside. And yeah, from that point of view, looks very similar to your dollar, but then the opposite, obviously, we're getting dollar weakness. Wait, this is dollar weakness, yeah, dollar weakness. And well, we don't have the three, we have 3A, yeah, we do have 3 AO bars actually, now red. but I don't know. It's not maybe, I don't know, just not as appealing maybe as the others. But this is a break, and any pullback could be the same scenario. I wouldn't expect much of a pullback here on the dollar yen, especially the dollar yen doesn't have to pull back that deep. So if I look at the 1 hour fractals here, let's see. Probably anywhere here, 121, 120, 70. Could be bouncing spots. We put on the moving averages. Yeah, I think that we got things aligned. You can see the 21 is still touching the 144, but it is a good angle. Price is well below it. So I think we got, just like the euro dollar, we see already initial kind of signs of a reversal here for, or retracement perhaps, I should say. Pound dollar, not yet. Pound dollar is actually the weakest the pound is the weakest against the dollar, but that's why the trend line break is important. But the euro dollar and dollar yen, have that already, that momentum of the moving averages here, bringing it along. So from that point of view, if it hooks back to the 21 EMA band, I think it could be good potential for downside as well. Now the target, well, same thing like the euro dollar. I wouldn't be aiming for very deep. I think 61.8 or 50 fib, 78.6 probably. It could be bouncing spots too. So same story really, because if you look at the weekly candle, what do we see? Well, we see a big wick as well. Did close bearish, but just barely. So yeah, that wick could still be a bouncing spot. Alrighty. Odd USD looks also pretty good. We already broke the triangle, as you can see here. Then we hooked back to that broken triangle trend line in 3 moves, respected it with a hourly pin bar, and now are moving away from it, as you can see. So from that point of view, looks good too. Let me put on the moving averages. By the way, for those that like moving averages, you might want to take a look at the webinar that Nana and I are going to have today on moving averages at noon UK time or 1 p.m. Central European time. And take a look at that link that I posted there if you're interested for the recording or live session there at 1 second. This link here, and we're going to have a lot of it's too long, there's an R at the end, webinar. That's the link. Or you can go to the main website and just go to blog, right? And yeah, we'll have webinars in September. So take a look at that with all kind of different topics. Moving average today. The moving average, as you can see here on the hourly, definitely in a downtrend. And price is breaking below the short term, has a good gap between the short and long term. And looks like a continuation of this trend. 4 hour 2, good gap. Everything is down, everything is lined. 21 is acting as a resistance. But I would like to see downside today. If it doesn't happen today, then it's probably taking a bit too long. All right, let me see where the Camarillo levels are. That's way further, actually. Now, of course, the euro dollar and pound dollar are looking for bounces to the upside. So that is one thing that is alarming with the odd USD, because it's looking for downside. So from that point of view, probably be good first to see what the dollar is doing. If the dollar fails, if the euro fails and the euro dollar starts moving down, the odd USD would be probably the better one. If the euro dollar starts pushing up, then maybe skipping the odd dollar would be better, because it could just be choppy. So the odd USD is well positioned for downside, and the euro dollar is okay positioned for upside. That's obviously contrary to each other, and therefore it really depends which one kind of dominates today, dollar weakness or dollar strength. If it is dollar strength, then odd USD downside could be good. If it's dollar weakness, then euro dollar upside would be better, and skipping the odd USD makes sense. Now, euro dollar actually had a perfect bounce at H4, and hit the H5 already. And let's see on the hourly. Yeah, well, nothing really changes. The only thing that I could do is probably move the fib up. That's the only thing. As this price starts to accelerate more, I don't think that a dip will not happen today. I think eventually it will. It's just that the dip will probably happen at a different spot, because I'm moving the fib up and the moving averages are climbing up as well. So maybe not be 112, 112 or 112.50, but it may be 112.60. Anywhere where the 50 or the 61.8 fib is, I think could be a good zone for a bounce. So it really depends. This could push even higher to 113.40 and then retrace. That's always the risk of not taking a breakout, but it was just not a spot of a breakout that I particularly liked. I liked the breakout earlier, here, for instance. Why? This candle. Because that's the breakout where there's space to the long-term moving average. And that's the breakout where price is pushing through this trend line. It's the breakout where price is going above the 21 band for the second time. Here's the first, here's the second. And when it does it the second time with a good candle like this, you're going to get some follow through. And here that follow through was iffy. Possible, but iffy. So that's the difference, I think. So I thought that this was a good bouncing spot here. And the blue, a good breakout. And now I'm looking for another good bounce, basically. Probably for follow through. All right. So it's sometimes annoying as a trader, but there's nothing else but to wait for a pullback, even though sometimes it can accelerate. At one point, it will pull back, and that's what I'll be waiting for. But anyone who did take it here or here, like I said in the video yesterday, is up a good number of pips. And from that point of view, if you're in that trade still, then I would probably keep an eye on this 5-minute chart. Probably take profit here. Depends on how long you want to hold it. And see if this 5-minute world, maybe even put the stop loss below here, or maybe eventually here. If you want to use it very tight, if you want to grab the profit, that's how you can do it. Or use the hourly lows, for instance. If you have more time and rather wait, then I would just put the stop loss below this bottom. Right there. Okay? That's if you took, by any chance, joined me on that trade yesterday. All right. So yeah, from that point of view, maybe you have to be cautious about how to use the downside if the euro dollar is moving up. Let's take a look at the euro odd. Maybe there's more trading there. All right. Big wick. That's true. Massive acceleration to the upside. So from that point of view, maybe not surprising we see such an exhaustion. But despite the wick, we didn't break this daily low and bouncing, broke above these candle highs here. So it looks too like a breakout to retest these resistances. Here too, I would say eventually dip back to these levels would be good. Let me take a look at the 4-hour chart. Yeah, I'll probably keep an eye on this 4-hour candle. If this 4-hour candle closes something like this, decently bullish, close near the high, can put a fib on that candle, and probably the 38.2 or 50 fib will be the bouncing spot. With stop loss below the low, in my opinion, I think that seems like a decent combination for follow through to these targets. And the main target I would say on the upside is probably the 50 fib, 160.75 up in here. So any dip, we expect a rally, and these fibs will be resistances too, most likely, but the main target probably the higher one. So this 4-hour could be a good candle to use as a trigger, I think. And then the fib could be the entry. And then each candle low could be used for the trail. So that's my idea on the euro odd. That probably maybe makes more sense than the odd USD at the moment. Same for the Kiwi. All right. Dollar CAD. Also bouncing off the long-term moving average. There is some divergence between these tops a bit. I mean, ultimately, it could be a bouncing spot too, just looking at the 4-hour chart. But the dollar strength, not maybe the best one here, so we'll be careful with that too. I mean, you can see the dollar doing better against commodity pairs than against the euro, pound, and yen, but from that point of view, they don't look that great. Of course, if we look at the euro crosses, like the euro odd, right, looks a bit better. Euro yen maybe not so much. It looks more bearish, in fact. And it looks like a triangle here. So if that triangle breaks, we did have downside before that, and it could be a continuation to the downside. Something to keep an eye on, the euro yen downside. Of course, that's contrary of the euro odd. So let's take a look at that odd yen then. That's the third one missing in these three pairs. And we can see the odd is also moving down compared to the yen. So let's see. So the Aussie is weaker than the yen, which makes sense. Euro is kind of in between. So yeah, the odd yen could be an interesting currency pair as well for downside, following kind of like that the dollar yen perhaps. But anyhow, it's basically the yen strength. We see it in the dollar yen, we see it in the euro yen, we see it in the odd yen. So probably every yen has this in a way. Not much difference there. So from that point of view, I still think probably I like the euro odd the most, the euro dollar the most at the moment. All right, so that's my cat. Just in case you hear that, I'm not sure. Does anyone hear that? All right. You do hear it? Cool. All right. She's giving me advice. Let's take a look at some other pairs. Is there resistance at euro odd? Yeah, definitely, definitely. I mean, we're ultimately looking at this top, obviously, big weekly wick, so that high will be difficult to break. And well, just putting a fib from top to bottom, and all these fibs are going to be resistance. But I don't think the 38.2 is going to be a heavy one. But the 50, 61.8, and 78.6 probably will. Those definitely could be turning spots for a bigger downside correction. This is candle 1, 2, 3, 4, 5 now. So most likely when it gets up, I think we'll see a failure and go back down. At this moment, that's what I think is the most likely. But very likely, in my opinion, seems this. And then we'll have to see. Does it bounce back up or does it fall further? Depends on price action at that point. So I like the euro dollar and euro odd potential for upside. For those that follow my webinars regularly, it's the trend and support resistance I just use to find the spots where I see a breakout with a wide enough space or a bounce with wide enough space that I can see price actually have a good chance of following through. There are, I mean, on many charts and pairs, there are tons of bounce and break spots at any point. But it's all about, in my opinion at least, which bounce and breaks have a decent probability of going the distance, a distance that is good enough for me to catch some good R2R. And that's why many of these bounce and break spots don't have that, so I skip those. And I think this upside bounce has an okay-ish potential upside. I don't think there's anything wrong with that. Pound odd is not as strong as the euro odd. Let's take a look at the euro pound. That's because the euro pound is moving up, indeed, after a very interesting upside and bull flaggy type of correction. So we'd expect more from the euro than from the pound at the moment. We do have euro news though. And we can see the effect. The euro doing better to the upside against the odd, against perhaps the CAD, but the pound yen is doing better because the pound is weakening. So anyone who wants to trade the yen could maybe be best off with the pound yen, or the dollar yen, or the odd yen, perhaps. Your CAD, we're going to see the same story repeat itself. Here too, finding the bounce off of that long-term moving average, roughly. Pound CAD probably not getting that bounce that much. See, a bit, but not as much. But all of these Euro odds and Euro CADs and all of these have an uptrend, but a strong candle. Uptrend, but a strong candle. So it's quite repetitive, the market today. And I guess we can take a look at many of these pairs, but they have kind of the same pattern. So from that point of view, it looks like the pound, Aussie, and dollar are relatively the weaker ones. Euro and yen, sorry, relative to stronger pair currencies. Yeah, so that's, I think, really the core of what I have to say. If you're looking at more webinars, we got one tomorrow. We got strategy tomorrow. Wednesday evening, then is going to take a look at price action trading school, candlesticks and trends. And Thursday evening, Nana and I are going to take a look at bounces and breakouts. Well, that's a perfect topic. We're talking about it a lot today. Bounces and breakouts of Forex trading. Talked about it last week indirectly already. Continue with that. Bounces and breakouts of Forex trading. That's Thursday, 4 p.m. GMT time, 5 p.m. London time, 6 p.m. Central European time. Same time for price action on Wednesday with Nanette, and tomorrow strategy same time as today at 7:45 UK time. Well, we can take a look at the heat map. It looks like the Euro, New Zealand, Pound, New Zealand, Euro Yen, not much. Euro Pound, slow. Hot Swissy, slow. Typical slow ones, more AUD. All right. Let's take a look at the Euro, New Zealand then. That's something we didn't look at. Same thing, also moving up indeed. And getting a breakout actually. Now, so well, if it hooks back or breaks above H3, one or the other. If it hits H3, pulls a bit back, could be a good buying spot again here. Or if it doesn't get that deep, but then starts to break above the fractal here, and the future fractal at H3 could be breakout to Euro, could be also interesting to look at. Let me see what the difference is with Euro CAD. Yeah, Euro New Zealand is better actually. The reason is because Euro New Zealand, you can see price is already above. It's already above it. It's already above the moving averages here, right? Whereas the Euro CAD actually starts to fight against it. It's still fighting against the long term. It's recovering. It still has actually a top here for our resistance right around the corner. So from that point of view, without any doubt, I'm glad I looked at the heat map because I found out the Euro New Zealand is a lot better than the Euro CAD. and probably even better than the euro dollar. So euro New Zealand actually number one at the moment. Especially if we have a good 4-hour candle that closes something like that. Here to retracement of that 4-hour candle to the 38 or 50 fib. Stop loss below that low and targeting these targets here. At 178.70, it's minus 61.8 target. At the moment, at least, not sure how far this candle will go. Kind of the same plan as the euro odd. So that's, I think, what I'm going to keep an eye on today. Otherwise, any other questions? Otherwise, I think that's it from my side. Let me take a last look at the euro dollar, still pushing. And continuing. It's a pity for Pierre. That's not an easy one. Pound USD. Still fighting against that trend line. But personally, I mean, that could be a trade too. Pound dollar break, dollar yen pullback. That's accelerating. So whenever it pulls back, 5-minute chart could give an idea about that. Something like this, for instance, you see here the acceleration, pullback. So something like that will have eventually acceleration, pullback to the moving averages. And your dollar should have that too. Acceleration was here, pullback was a flag, acceleration, pullback, acceleration, pullback, acceleration, something like that. All right, folks, thanks so much for joining. That wraps up for today. And take a look at the webinars. I don't have the link anymore. Well, you can find it. Just go to education and hit webinars. And good trading today. And hope to see you in the webinar tomorrow when we take a look at strategy. Don't forget to let me know which strategy you want to take a look at tomorrow if you have already a preference. Okay? Cheers.